Hello and welcome to today's episode of Young and Visionary. You're with me, Esnat Suleiman, and today I want to talk about how you can get started in your investment journey. Now, in past episodes, I have spoken about how you can prepare yourselves, goal setting, and things of that nature. But today I want to dive into the actual assets that you should consider if you're just starting off in your investment journey. Now, I get approached a lot by people who have not invested in the past and they want to know which assets they should actually invest in. Now, I always recommend, if you're a first-time investor, invest in fixed income securities. Now, when I talk of fixed income securities, I will limit my discussion to fixed deposits and repo investments. And the reason I recommend these ones is because at the time that you're investing, you know exactly how much you're going to make by the time that your investment matures. That's the first and most important thing. The second thing is that the level of risks associated with the fixed deposit and the repo investment is very minimal. So you will unlikely lose any money, because the last thing for a first-time investor is to actually lose money, because once they do, they will lose the trust in the investment system. So we need to make sure that you're able to build your trust in the investment system. So I recommend always the fixed income securities for a first-time investor. So what are these fixed income investments? The first one is the fixed deposit. Now, a fixed deposit is you simply putting money with a financial institution, and the financial institution tells you that they will pay you back your money with interest after a specified period of time. So it depends on what you're looking for. Are you looking to go short term? Are you looking to go long term? So you can place funds for 30 days, you can place funds for 60 days, you can even place funds for 90 days or even longer than that. It is completely up to you. Where can you invest in fixed deposits? You can go to any bank. You should be able to be offered a fixed deposit investment. You can also go to a fund manager. And with a fund manager, you will also be able to place a fixed deposit. The repo. What is a repo? Now, the repo is only offered by discount houses. In Malawi, currently, we have one discount house, which is First Discount House. And a repo investment works very similar to a fixed deposit on the face of it from any investor. But on the background, what is happening is that when you give your funds, you are actually buying a risk-free instrument, a government instrument from the company, and then at the maturity you're selling it back to them, and then you earn your return plus the interest that was agreed. But at the face of it, you feel like all you're doing is placing money and then getting whatever you put in plus interest at the end of the period. So what you find is the repo investments are able to give you a higher investment return than other fixed deposits. So if you're investing for the first time, find yourself a fixed income investment to make. Now, one thing that I want to point out, and what I have seen a lot, is that when people are investing for the first time, they also have high expectations in terms of what level of returns they should expect. So these are people who maybe have businesses, so they've seen the sort of returns they get in businesses. Maybe it's 50%, maybe it's 100%, depending on the nature of the business. And then there are people as well who have invested in other informal types of investments, like the village banks, which maybe give you a higher return. Now, when they come to the formal return and they hear of 13% or maybe 14%, they feel like they're not getting an adequate return. But what is important for you to note is that with the formal investments, the level of risk is so minimal. So you could be earning high returns in a village bank, but you could potentially lose all the money that you have put in. Or you're in a business and then everything just goes wrong. You didn't plan for it to go wrong. It's a business that has been going great, but there's a sudden shift in the environment, like what happened with COVID, or even, for example, what's happening with power currently in Malawi. You find that you're not able to generate the level of profits that you were able to generate before, and all of a sudden your business isn't going so well. With the fixed income securities, like I said, you will know what level of return you're going to get at the end of the investment. So the risk is very minimal. So you get a return relative to the level of risk. So this is a great way for you to start off. In future, I'll also be talking about which age group these type of investments are also most suitable for. So even though you may be getting into these investments because you're a first time investor, once you get into the habit of investing, you start to diversify your investments. Depending on your age group, you may have to continue to lean more towards fixed income investments, or maybe you may have to diversify more into the higher risk investments but maintain the risk-free investment as your contingency fund